invested over $5,000 into a dividend ETF that pays me every single week. The fund is YMAX, part of the YieldMax family, known for pushing the limits on income generation. And in this video, I'll break down how it works, the dividends I've collected so far, NAV erosion, and my total return after 1 month. Let's dive in. Now, what exactly is YMAX? It's the YieldMax Universe Fund of Option Income ETFs. Basically a fund of funds, which means it invests in other YieldMax ETFs. The managers update the fund monthly, adding any new YieldMax funds and keeping the portfolio equally weighted. The yield right now is a bit over 50% annually. Keep in mind, that changes a lot since it's based on both the current share price and the trailing payouts. But that's where it sits at the time of this video. At today's price of about $12.69 per share, YMAX is down 27% in the past year if you only looked at the share price, and that's typical for YieldMax funds. They take a hit on the NAV because they're paying out such aggressive dividends. But here's the twist, when you factor in those dividends, the picture changes. Using the dividend channels drip calculator, reinvesting dividends gives you a 28% total return, while taking them as income gives you about 22%. The share price fell from $17 to about $12.70. That's about $4.50 lost in NAV, but the fund paid about $8.40 in dividends, which more than offset the erosion. Now let's talk about the fees. YMAX charges a management expense ratio of 1.28%, which is pretty high compared to something like Vanguard's VU at just 0.03%, but here's the difference. VU is a passive ETF that simply tracks the S&P 500, while YMAX on the other hand is an actively managed fund, meaning that the managers are constantly rebalancing and adjusting the portfolio. Although YMAX is fairly diversified, it's still seen as a high-risk investment because of the strategies used by the underlying YieldMax ETFs, and that's just the nature of chasing such high income. With that said, let's dive into my own position and see how it's been working out so far. I recently made a purchase of about $5,953 into YMAX on August 4th, 2025, and my average cost came in around $13.26 per share, giving me roughly 449 shares. Since YMAX pays out weekly, I've already collected 4 dividends. The first one is $65, second is $49, third is $72, and the most recent one being $61. That's a total of $249 in gross dividends, or about $211 after withholding taxes. In just 1 month, that works out to roughly 3.5% of my initial investment returned in cash flow. Now, instead of using DRIP and reinvesting directly back into YMAX, I've been tracking these dividends in a separate table and using the cash to buy shares of another ETF, QQQM. This one's aimed more at long-term growth. For now, my focus is building up realized gains and stacking a bit of a growth position using these weekly payouts. Down the road, I may switch on DRIP, but at this stage, I like the idea of using YMAX as a cash flow while funneling the proceeds into something more stable with a bit more compounding potential. Now, earlier we touched on the NAV erosion, but let's look how it's impacted my position. So I bought in around $13.26 per share, and over the past month, YMAX has been on a bit of a steady decline. At the time of this video, the shares are currently sitting around $12.69, and that means my position, which started at about $5,953, is now worth about $5,697. On paper, that's a small loss, but remember, I've also collected $211 in net dividends. So when you add everything together, I'm actually only down about $43 overall, or negative 0.74%. This is the classic trade-off with YieldMax funds. You're getting aggressive cash flow up front, but the share price tends to go lower because of how these funds are structured. The big question always is whether dividends can outpace the erosion over time, and that's exactly what I'll be tracking as I go on. Something I always like to do with these funds is compare how the money would have performed if I simply put it into the S&P 500 ETF VU. Since I made my YMAX purchase on August 4th, 2025, I ran the same time frame through a DRIP calculator. Over that period, VU has returned about 2.23%. So in this first month, my YMAX position has actually underperformed the general market. But at the end of the day, the whole point of this YieldMax allocation is more of an experiment. YieldMax funds currently only make up a little over 5% of my overall portfolio. And if you've been following the channel, you'll know that I've been testing several of these ETFs and tracking their performance closely. I wouldn't say that I'm giving up on YMAX just yet. 1 month is a bit short for me to draw a real conclusion, but I will be watching this closely and comparing these results against things like the S&P 500. I'll be sharing future updates to see whether this strategy can actually deliver some decent returns over time. But that's where things stand after 1 month of holding YMAX. Plenty of dividends coming in, some NAV erosion to watch, and a bit of underperformance compared to VU so far. But this is just the beginning of the experiment, so we'll have to see what happens in future updates. Now, if you found this video helpful, make sure to hit that like button and subscribe to the channel so you don't miss the next check-in. And of course, this video is for educational and entertainment purposes only, not any financial advice, so always do your own research before making investment decisions.